Mexican homes are not as electrified as Texas homes, but the disruption is real. And now the concern is that with the announcement that the governor of Texas has made of stopping exports from Texas to anywhere, including Mexico, until the end of the week, well, the question is, what does that mean for electricity supply and industrial activity in Mexico? There's plants that have already stopped activities. So it's a systemic failure and a systemic challenge, even though it's a short-term challenge, but it does bring up many questions about the design of the grid, of the gas transportation system, and lessons that should have been learned before that are not being applied now, and of course new lessons that have to be incorporated into the policymaking structure of both Texas, Mexico, and certainly the US.
In the immediate term, Aldo, there's sort of mixed reports as to how long this will last. We're 2 to 4 million barrels of US oil production is currently out of circulation. The storm seems to be still sustaining, with reports of another one coming on the back of it. This could be weeks rather than days.
It could be, but I'm taking it like one day at a time, and let's see how the storm systems behave. But in fact, it's a time to rethink policy. What I think it's very important here is to recognize this difference between the optimization and profit maximization mindset of business and the redundancy mindset that may or may not have policymakers. And this is where attention exists. We know that investments had been made in terms of redundancy or in adapting the infrastructure to extreme cold weather. This would not have happened. Well, those things are very costly. And for companies that are in the business of doing business and competing, the question is, how many resources should they devote to this type of investments when these storms have not been that frequent?
Well, it does appear that they're becoming more
Correct.
frequent. And given
Correct.
the scale of the CapEx cuts last year, you wonder what chickens are going to come home to roost on the back of that. Aldo, listen, thank you so much for jumping in last minute and giving us that update and insight from Mexico, Tex-Mex. And hopefully next time we check in with you, we won't be seeing your breath fog up on the screen, as we've seen some amazing photos. Amena Bakr, Deputy Bureau Chief of Energy Intelligence. I thought the top story this morning was going to be Amena and the comments made yesterday by the Saudi oil minister, urging caution, warning against predictability, using his creative language once again. What was your takeaway from yesterday? And as one, and as we are all in the predictability business, how do you march away from yesterday towards March 4th?
Good morning, Sean. Good morning, everyone. What I took yesterday from the energy minister's statements is that, one, he didn't give any hint on what policy they're going to be setting at the upcoming meeting. Two, he usually gives this general message of caution. They want to be cautious. Demand is still not recovering at a very clear pace, so they want to be careful. And I just want to point out something, Shauna. We've seen headlines yesterday about saying Saudi Arabia is going to return production, etc. I think people forgot that the voluntary cuts of 1 million barrels per day were only intended for 2 months, February and March. After that, I mean, Saudi didn't say anything about extending the cuts, this voluntary cut further. So, of course, there's going to be these extra barrels coming in April. Now, with regards to loosening up the cuts with the OPEC Plus group, that's still not clear, and they need to hear from all the countries before a decision is taken. We understand that countries such as Russia, for example, Novak sees a more balanced market, and Russia might ask for an ease to the cuts. How that plays out in the meeting, that's the unpredictable part. We've seen compromises being made at almost every single OPEC meeting, and nobody can predict the outcome of the upcoming meeting, especially because we have high prices. And this is another factor. Do they ease the cuts now and risk the price going low, or do they take a cautious approach? So it's, as Prince Abdulaziz put it, we can't predict the unpredictable.
Dr. Carole Nakhle, CEO of Crystol Energy. The other important voice, Carole, that I heard yesterday at that symposium was the Indian energy minister urging concern about the speed in which oil prices were climbing on the consuming countries and on the global economic recovery being so fragile that OPEC Plus need to be careful. What are your thoughts on that? And is that India talking their own book, perhaps, but nonetheless, that this surge, and now on the back of Texas, we could be heading towards $70? Carole? Biggity bomb, biggity boo. Your screen looks a little frozen. Let's flip over to Rustin Edwards in Geneva, and hopefully the Black Forest will defrost. Rustin, the same to you, given the scale and the speed of the price escalation now. I mean, 3 weeks in a row, I think, 5% price increase each week. Does that continue, and what impact does that then have on this fragile demand recovery?
Well, there's enough impetus to keep it moving higher. I mean, you've got now that all the fun and games in the Senate are done, you've got the U.S. government talking about the stimulus package. I think the current weather event in Texas is probably going to push that more to the forefront, because, it is a major economic blackout from the state of Texas, and they're going to need some support from the federal government. So that's probably going to push talks of stimulus further to the front burner than keeping it on the back burner that was intimated last week. So, do we have motivation to move higher? We certainly do. With the issue in the United States, that's going to increase refining margins in the European refining sector, pull on Brent crude structure, and bring Brent crude into the European refiners so they can move products to the U.S. East Coast. The knock-on effect of the freeze is something where the whole logistics system in the United States originates in Texas, if you think about it, with Colonial Pipeline and in the Plantation Pipeline pushing products up the eastern seaboard. They can't push products unless they've got feed coming from refineries that are shut down. So that mainly means that supply has to get pulled in from Europe. So we could see this support in the current flat price of crude. We could see crude go higher if the European refining margin picks up to start pushing barrels out of Europe into the U.S. East Coast to keep gasoline and diesel supplies at a standard pace.
Carole, are you with us? I see you're back. Are you frozen again? Can you hear me? You seem to be having troubles there. Amena, you made the point, I think, a little bit about at least the article that we have in our digest today from the Wall Street Journal on this issue, that the Saudis would be bringing back production. As you say, what's the surprise there? They only said they were going to do it for 2 months. I suppose the market is still wondering to how that million barrels does come back. Based on the words of the minister yesterday, extreme caution, the referee hasn't blown his whistle yet, all of that very extreme cautious language. I mean, it would be misleading if that didn't indicate this is going to be a staggered, slow increase in supply, regardless of when that million barrels was cut and for how long. It didn't sound like the words in which you would then put 1 million barrels back on the market on April 1st.
Sure, but Sean, something to point out, this is a voluntary cut. This is a cut above their quota. So it's over compliance in a way. And we understand that this cut also came as a result of maintenance that was going on several fields. And this maintenance ended now.
Right.
how they choose to bring back this production, whether it's going to be gradual, they're going to divide it up by months. I mean, we can sit here and speculate for hours. It's still not clear, and that's the kind of I mean, these are all elements that we can't really guess at this point.
I suppose the market would be indicating today, at least, bring it back as quick as you can if you're on the consuming side of the trade, because inevitably the price is for consumers, Carole, quite painful. We had the words yesterday from the Indian energy minister, quite sort of sharp words in the middle of the IEA, IEF, OPEC meeting, that these price increases could be quite damaging to the global economic recovery. Your thoughts on that, Carole?
Good morning again. Apology for what happened earlier.
Yeah.
I think it's the freeze from Texas hitting us here.
Yes.
I mean, look, this is definitely a problem, because the last thing you want when you are going through a fragile economic recovery is that you're faced with higher commodity prices, particularly if they jump quickly, like what happened with oil prices, especially for a major consumer such as India. So it's quite understandable. And this was just a question of timing before it was going to be emerged, because I think since the beginning of the crisis, the first time I hear an official complaining or raising concerns about the impact of higher prices on the economic recovery. And this is, as long as prices stay at this level, I think we're going to hear more voices coming to support global economies and warn of higher prices. And that could put pressure on OPEC+. And apologies, I did not hear what Rustin and Amena said in that respect, but that could by itself put pressure on OPEC+, particularly the Saudis, who always played the role of the central banker of oil markets, and they may feel that they need to support the global economic recovery, because what people forget is that, you know, I know there is this kind of optimism, everything is going fine and vaccination is being rolling out, but the numbers are going down, not of infection of COVID, not because of vaccination, this is yet to be confirmed, but because of lockdowns. And as soon as lockdowns are eased again, scientists are warning of even a third wave of infection across Europe. So we're still in a very fragile zone, and the increase in prices, in oil prices and other commodity, kind of give us the wrong impression of a great economic recovery. So more and more people are going to complain about the higher prices impact on their economic recovery.
Rustin, the other aspect of this is the pillar of inventories. We saw a big number yesterday, API declining. We'll see if the EIA backs that up again today. But the issue of backwardation in the market now, quite steep, is really putting an acceleration on getting inventories out to the market. But yet reporting indicates that there is some delays at ports, particularly around China, for offloading on those trying to get rid of floating storage. What's your understanding of that narrative, and how do you think it plays out?
Well, you're going to have the delays in China are endemic of the Chinese New Year holiday. I mean, it's something experienced every year, although this seems to be a little bit more larger in scale than in the past. I don't have the exact figure with me here today, but I mean, it is fairly substantial at the moment, but that should ease as you get back into the normal, let's say, industrial production of China, moving oil out and getting things going back into the refining sectors. You know, the backwardation is now across all products. I mean, ICE gas oil futures, I think, was the last one that was in contango. It's now flipping the backwardation. So, you know, stock draws are happening across the board. A lot of that has to do with refineries not running at full capacity. I mean, I think in a worldwide sense, we're still 16.7 million barrels of capacity that is offline. So that's still fairly substantial. And, you know, with demand fits and starts around the world, you know, we do see more stocks being drawn in certain industrial zones versus others. I think Fujairah, Singapore, both shown very nice stock draws on light distillates as well as middle distillates and residuums. United States, we'll see how this all impacts, but even with the freeze in Texas, the data on those inventory impacts won't be felt for another 10 days just because of the reporting lag that goes into the IEA or EIA data sets. So, you know, it'll be seen, but it should be substantial in the US as well.
Amena, Saudi position, as we say, it seems to be obviously keeping their cards pretty close to their chest. Every meeting now is kind of a blank page. Where are the other major producers, do you think, on the increase supply and the pace of increasing supply, and also the possibility or probability at some point, given the Iran seems to be coming back into the conversation, at least the permanent members of the Security Council now starting to discuss how to reactivate the JCPOA. So where do the other OPEC producers beyond Saudi view this return to increased production?
In general, Sean, I tell you that these producers are looking at their screens and looking at prices above 60, 62, and now almost at $64. And they're thinking one thing: we want to increase exports. We want to help revive our budgets after a very, very difficult year. So that's the general kind of instinct many of these producers have. But at the same time, they're weighing the fact that if they do that, you might get a decrease in price. They might go back to, and they have Saudi Arabia warning them that if they start flooding the market, they'll go back to a point where they'll have to recover all this progress, etc. So, but I would say that many members are probably going to ask to ease the cuts at the upcoming meeting, especially as the meeting before, they decided to freeze the cuts at the level. So that's one meeting where they didn't do anything. Russia and Kazakhstan got an exception. So at this meeting, I expect more players to come out and say they want to ease their cuts.
I mean, the Texas situation at the moment, the U.S. production collapse or supply disruption does in a way complicate the decision that OPEC now faces, given this, what you would think is a temporary, although some indications it could last weeks, but it is a temporary disruption, but yet it could put an upward push on the price that then puts increased pressure on new supply coming out of OPEC plus. Do you think they will look through that, or they will react to it?
For sure, that's a factor that they will be looking at, and it's something that the Russian Deputy Prime Minister Novak always mentions at meetings, that he has concerns over certain when the price reaches a certain level that the U.S. shale will recover. So they will, they will make that argument that the market does need supply. And if you look at the OPEC monthly report, which was revised 3 times in the span of 2 months on the demand side, the call on OPEC is higher. So there is a need for more supply from the group.
Carole, I know you've been advocating, or at least pointing towards the fact that shale will recover, that shale will surprise once again. We had some pretty strong comments from the Oxy CEO, Vicky Halub, overnight. We posted some of them on the screen earlier, that her outlook for shale recovery was quite pessimistic. I'm wondering your thoughts on that, and that sort of higher cost supply coming back in to challenge OPEC plus.
Actually, I listened to the conversation and to the speech that the CEO of Oxy, Vicky, made yesterday. And what I felt that she was actually calling for caution in terms of discipline of various companies. And she was trying to position Oxy as a wise, rational company in terms of investment, distinguishing itself from other companies that took a major risk, and saying that investors are looking today for value and not necessarily for growth. So definitely we are foreseeing better discipline, greater discipline and consciousness about investing in generating value, rather than say building infrastructure that is not terribly efficient. And the crisis that happened because of the storm confirms that. But again, Sean, it's not my view about on shale. It's just, what I learned in economic history and economic theory is that we should never underestimate a competitive market structure and the power of the private sector should the right incentives be provided. And in the US, you have the above ground incentives from the government perspective, from policy, but also you have the price incentive, the factor that can trigger a certain behavior. And this is something that even the most sophisticated models do not do not capture and do not absorb. But apart from that, apart from the supply side, I go back to a point I made several times on your shows, Sean. That is the demand factor. The demand is the biggest wild card. People talk about potential supply gap because investment is not being made, and lots of capex has been written off. But actually, this is entirely irrelevant if demand does not grow strongly to create this kind of supply gap that people are expecting. So irrespective of what happens in shale, I still believe that the private sector will generate something that we are not able to understand fully at this stage, but also there is a demand equation where demand growth, if you look at the various forecasts from the IEA and OPEC, they tend to be quite conservative for this year. And even if you keep the virus under control successfully, by the end of this year, oil demand is not expected to go back to pre-COVID levels before at least 2023 and maybe beyond, according to various international forecasting agencies.
Rustin, the other thing that was comments by Vicky Haloub was, and it's sort of the knock-on of the comments on shale, was that U.S. oil producers and Oxy, in her point, will be looking to consolidate a greater value out of current production rather than investing in new production, new E&P going forward, which from the point of view of future supply does point towards a tightness in the market that OPEC Plus will have to meet.
Well, I think that's a case of, everybody's looking at the pandemic and the response that a lot of the oil majors have had. I mean, I think they've all come out with some type of greening of their business, reducing the demand on or the need for petroleum-based material, looking more at renewables and what have you. So, I mean, I think it's a very correct statement to make that there may not be the need for all the petroleum. Therefore, we end up in a consolidative pattern where you start seeing some of the smaller E&P companies get absorbed by the oil majors or merge together to form new entities that are going to manage their current offtake or current projects that are underway much more efficiently than having the current structure they have in place or looking for developing new fields. I mean, I don't know if the investor appetite's there for more wholesale oil production worldwide.
Well, it's certainly not on the E side, i.e. the exploration side.
Yeah, that's is it no longer in vogue to do so? I mean, if you think of in the U.S. oil patch, there's probably going to be more consolidations going to happen there over the next 6 months. Financing lines start coming up for renegotiation for a lot of companies, and if they can't get the financing separately, maybe they can do it better together. So it is something that has to be watched, and it's probably going to happen.
The other data point that you mentioned, which I thought was still quite interesting, 1,000 producers, different companies producing in the Permian Basin, and that there needs to be consolidation. 1,000 producers, that's a big number. Let's get the survey question in before we get to last comments today. Brent could reach $70 a barrel ahead of OPEC Plus meeting if U.S. supply disruption continues through the end of the month. Agree or disagree? Brent already passed through 65 this morning out of Asia, could reach 70 ahead of OPEC meeting on March 4th. If the U.S. supply disruption continues through the end of the month, there seems to be some reporting that indicates that this disruption could be weeks and not days, as you would expect from a hurricane in the Gulf of Mexico. This looks like it might be longer. So what's the view in the room on that? And we'll go around the tables. Amena, given the nature of OPEC's sort of this approach now is to gather and surprise, if you like, do you expect any strong signaling in the coming weeks? Yesterday, between the Wall Street Journal article that Saudi are going to return production and the Prince's comments about extreme caution, they seem to be sort of counterintuitive to each other. Do you expect signaling to come in the coming days and weeks ahead of this meeting?
The one signal that we always look for, and it already happened, is a call between Putin and the Saudi leadership, i.e. MBS. that call already happened, and that's just indicating that both countries are aligned. Both countries still want to remain in the group and believe in a coordinated action to manage the market. So that's step one. So we're not going to fall into a situation where we had the price war last year. So that's
we are coming up to the anniversary of that, so that's worth
exactly noting. So we don't want that to happen. In terms of all the technical detail on what happens, how production comes back, and I mean, all of that is negotiated on the day. So I don't, I mean, if Prince Abdulaziz still wants to keep everything a secret, everything will remain a secret until the day. And I think that's the case.
The approach. Rustin, your rest of the week as we come to the end of ours here in the Middle East. We have the G7 meeting this weekend.
Well, for me, it's seeing how the import flow in the United States gets handled. U.S. imports 5 to 6 million barrels a day, exports 2 to 3 million barrels a day. Current freeze, that means ships are going to start stacking up in the Gulf Coast waiting to discharge. Without refineries running, there's no place to put the oil. So we could see a massive inflow of ships just waiting to discharge cargo, and we'll see how that develops over time. That should give a good indication on when things should get back to somewhat semblance of normality in Texas.
Let's get the result of the survey before Carole has the last word this morning. Agree. Oh my God, I wasn't expecting that. 82%. No wishful thinking in this room, is it perhaps? Carole, your thoughts, close out the week and beyond.
You know, the results were quite predictable because there's something that we call herd instinct, and that's what you feel today, perhaps in equity markets and financial markets, where everybody believe in the same thing. And today they're all believing in the same direction. But what happens if they start believing in the opposite direction? I already start to hear noises from people saying, no, you have to sell off because the markets are going to crash. Now, for the rest of the week, really, I mean, all eyes will be on the US. But it's ironic because I know the drop in temperature is something very severe, but the US in general has been prone to these kind of weather disasters. If I'm just thinking about the Gulf of Mexico, the hurricanes that disrupted production there, oil and gas production, but they are very short-term effect. Yes, they can last a couple of weeks, but they recover after that. And really, people keep on talking about the drawdown on inventories, but here I would like to conclude by referring to a very clever article by Julian Lee in Bloomberg, where he criticized the use of the volume of inventories. And there was a very clever analysis saying it's a moving target, it's something that is not reliable to give us a good indication of where the markets are heading, because you have to take consideration also the changes in demand. And as a result, he recommended that OPEC should focus on the price, but they cannot do that. Otherwise, they'd be described as a cartel. But that's something also to keep in mind when we're observing and following the official data that will come out on inventories levels.
Okay, well, let's wrap it up there and thank Aldo for checking in from Mexico this morning, and Rustin in Geneva, Amena here in Dubai, Carole in Germany. Thank you for your analysis and insights on where this very vibrant market goes. It'll be interesting to see when we come back on Monday whether the thing is reversed or it has indeed kept moving. We look forward to next week. We'll see everybody on Sunday for the week in review. But until then, have a great end of the week, and we'll catch up with you next week. All the best. Thank you.
Thank you, everybody. Have a good day.
Bye.